Ladies and gentlemen, good day and welcome to Nitin Spinners Limited Q1 FY23 earnings conference call hosted by Smiths Limited. As a reminder, all participant lines will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Avnish Chandra. Thank you, and over to you, sir.
Thank you, Aman. Good evening, everyone. On behalf of Smiths Limited, I welcome you all to Q1 FY23 conference call of Nitin Spinners Limited. We are pleased to host the top management of the company. Today we have with us Mr. Dinesh Nolka, Promoter and Managing Director of the company, and Mr. P. Maheshwari, CFO of the company. We will start the call with initial commentaries and results, and then we will open the floor for question and answer. Now I will hand over the call to Mr. Nolka, Managing Director of the company. Over to you, Dinesh sir.
Thank you, Avnish. Good evening and a warm welcome to all the participants to this investor conference call of our first quarter results. I hope you all are keeping safe and healthy. I have with me Mr. P. Maheshwari, Chief Financial Officer of the Nitin Spinners. I hope all of you must have had a chance to look at our investor presentation that is uploaded on the company's website as well as on the stock exchanges. Let me first start with the industry and business scenario. As you all know, the cotton textile sector is witnessing an unprecedented situation in terms of heavy fluctuations in cotton yarn prices in international and domestic markets. Shortage of cotton in domestic markets and demand disruption due to high volatility. The international cotton prices on ICE exchange after peaking to about 155 per US cent per pound is now lower to about 105 US cents by June, and December futures are now quoted at about 96 cents per pound. Indian cotton prices of Shankar 6 have also touched a peak of about 1,06,000 rupees a candy in the month of May, is now down to about 92,000 rupees per candy, and December futures are quoted at about 70,000 rupees per candy. Due to these heavy fluctuations, everyone in the downstream channel, producers of the fabric, garments, have adopted wait and watch policy and avoiding the further orders and waiting for cotton and yarn prices to settle down, and in the meantime reducing their inventories pipelines. Indian spinners are at a steep disadvantage since domestic cotton is abnormally higher than the international cotton prices, making it difficult for Indian yarn producers to compete in world markets. Moreover, shortage of the physical cotton in India made the situation even more difficult. Spinners have contracted for imported cotton after removal of duty by government. However, due to logistic challenges, the cotton is arriving with a lag of around 3 to 4 months. Thus, spinners are facing severe shortage of cotton. In this situation, spinners are resorting to production cuts to avoid heavy losses and pile up of inventory. This situation is expected to remain till arrival of new cotton, which is expected in full form by end of October. However, with the increasing sowing of cotton and good monsoons, and Government of India's efforts on the various treaty and FTA arrangements, PLI, Mega Textile Park, and the China Plus One strategy, which is already playing out, we believe that Indian textile industry's long-term growth prospects remain positive. Coming to the company's performance in this quarter, due to increase in raw material cost and a small reduction in production, the margin remained under pressure. We have achieved the revenue growth of 28% year-on-year despite the challenging environment. Situation in current quarter remains extremely challenging as international demand is much lower due to price uncertainty and volatility, and it is uneconomical to sell the yarn by buying cotton at current market prices. As a result, during the quarter, we expect the production to be lower. However, we believe that situation will restore to normalcy with the arrival of new cottons. In view of current volatile situation, we are increasing the share in the value-added segment to reduce our risks. Our own fabric segment now constitutes 19% of our total revenue in Q1 FY23 as compared to 12% in Q1 FY22 and 14% in the full financial year last year, 22. Regarding CapEx, on the CapEx front, we are on track with the execution and expect to commence the project within the timelines envisaged by us in our earlier communications. We are determined to have a sharp focus on our business and to deliver superior quality and wide range of products to our customers. We'll strive to maintain our top-line growth momentum by optimizing our capital use and placing a strong emphasis on value-added products. Our differentiated strategy is characterized by innovation and sustainable practices. This is all from my side. I shall now hand over the call to Mr. Maheshwari to give you the operating and financial highlights for the quarter gone by.
Thank you, sir. Good afternoon, everyone, and thank you for joining the call. I would like to share operational and financial highlights for the quarter ended 30th June 2022. Revenue for the current quarter increased to rupees 709 crores from rupees 555 crores in Q1 FY22, that is increase of 28% YoY. On quarter-on-quarter basis, the same has reduced by 8%, mainly due to increase in inventories. EBITDA for the quarter stood at rupees 109 crores as compared to rupees 129 crores in Q1 FY22. That is lower by about 15% on year-on-year basis. On quarter-on-quarter basis, the same is reduced from 167 crores to rupees 109 crores. EBITDA margin for the quarter is 15.4% as against margin of 23.2% in Q1 FY22 and Q4 22 margins of 21.8%. This was mainly due to increased raw material costs. Reported PAT for the quarter is rupees 66 crores as against rupees 60 crores in Q1 22 and 86 crores of Q4 22. EPS and cash EPS for the quarter is rupees 11.66 and rupees 15.54 per share respectively. And during the quarter, we produced 16,700 metric tons of yarn as against 17,700 metric tons in Q1 FY22. Out of that, about 25% yarn has been captively consumed. Knitted fabric production was 1,545 metric tons during the quarter against 1,935 metric tons during last year's same quarter. Woven fabric production for the quarter was 70 lakh meters as against 62 lakh meters in Q1 FY22, and whereas the finished fabric production was 61 lakh meters during the quarter as against 46 lakh meters in Q1 FY22. And that's all from my side. Now I open the floor for question and answers.
Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. First question is on the line of Monish Kodke from HDFC Mutual Fund. Please go ahead.
Sir, thank you for the opportunity. Sir, what was our average realization in spinning yarn and knitting fabric and woven fabric for Q1?
Hello.
Hello?
Hello?
Yeah.
Yeah, sir. What was our average realization in spinning, knitting and woven in Q1?
Basically, you want to know the breakup of the top line, or you want?
Yeah, sales price. Like what was 400 rupees per kg or what?
Normally, we do not disclose these particular in which particular what average realization we have get. But I can I can give you a ballpark number. That
okay.
We have realized more than 400 rupees a kg in the yarn.
Okay. And sir, fabric and this woven and knitting fabric?
Similarly, I think always woven is knitted fabric will be always higher than the yarn segment. In the gray fabric segment also, normally it is a mix of gray as well as the finished one. So normally we do not share price there.
Okay, no problem. And sir, this fabric capacity which we have, so knitting and woven, so we make gray fabric as well as processed fabric for both?
In case of woven fabric, we make woven as well as process both. In case of knitted, we only do greige.
Okay. And so in slide 11, we have we have proposed capex of 955 crores. So what would be the split of that capex, in spinning, knitting, and woven?
This I have explained in our last conference calls also.
Okay.
I'd like to again share with you that out of this, nearly 700 crore plus is going to go for our spinning.
Okay.
Business. About knitting business and woven fabric, knit and woven and processing fabric will be about 155 crores, and another nearly 100 crore will be for the margin money.
Okay. And so last question, what was the inventory gain in Q1 out of our EBITDA margin of 15%?
I don't think there was any inventory gain for us.
Okay.
We continue to maintain a very reasonable level of inventory, so which is already getting rollover. There is no inventory gains rather, as I explained in my initial commentary, there are losses because of the prices going down.
Okay. Thank you, sir.
Thank you. The next question is from the line of Prerna Jhunjhunwala from Elara Securities. Please go ahead.
Thank you. So I just wanted to understand how are you operating in a current scenario where cotton price is really expensive and it is difficult to pass on the higher price to the customer. So what is your current operating utilization across businesses? And what kind of strategic decisions you have taken to overcome losses in the next 6 months?
First of all, Prerna, as we envisage that the situation would normalize once the new cotton crop comes in, as we are already seeing that the prices of raw cotton in the future for the new crop is already getting in line with the international markets. So we do not expect that this challenge will last for another 6 months or so. We are expecting that another 3 months or so, by mid of November, we should be in a normalized position. Regarding the 3 months which we have in hand at the moment, and already 1.5 months which has passed, we are trying to see that we do not buy the new cottons at a higher price, because since the higher price cotton if you buy today is not making any sense. So accordingly, we are right sizing our capacities as per the inventories which has already been purchased by us. As far as capacity utilization of various businesses is concerned, our spinning business is operating, I think, at nearly 30% down than our standard capacity. As far as our weaving capacities and weaving and finishing capacities, they are running at nearly 90% levels. They are running at full capacities, what we normally operate at. And knitting capacity, since knit business is also very, very down, international brands are not sourcing this all over the world, so that is also down to around 50% level.
Okay. And so at current operating levels, that spinning is 30% lower and it is at 50% lower than our normal utilization rates. Will it be fair to assume that we would largely only break even in the quarter?
Frankly, I would not like to extrapolate that.
As an industry, if it would have been operating at these levels, because I don't want to understand your cotton purchase cost, but just to understand that these operating levels must be across the industry also. So.
Yeah. Most of the industry is operating today. If you see the average, what we understand is that the cotton yarn production is down by about 40%. and 10% has moved to the alternate blends, synthetic blends. So in all, about 30% capacity all over the country is down in various, almost most of the areas today. So as such, if we normally spinning mills are having different cost structure, different spinning mills will have different cost structure. Depending on same, we will be able to judge actually the operating leverages. But we feel at these levels we should be able to, at 70% levels, normally there is break even only.
Okay.
Beyond this level, there will be definitely loss.
Okay. And sir, last question on cotton versus blended. How much of your capacity has been shifted to blended currently? And how is the performance there? Because our blended players are reporting decent performance till now.
Yeah, definitely blended segment is better. Synthetic segment is still superior, and we have shifted about 7 to 10% of our capacity, for which we were able to do because of our inherent machinery's availability. Beyond that, we are also not able to shift the capacity.
Okay, this is still good. Say 10% capacity shifting to blended. Okay, sir. Thank you so much, sir. All the best. I'll return to the question queue if required.
Yeah.
Thank you. Our next question is on the line of Aman from Augmenta Research Private Limited. Please go ahead.
Hi, sir, and thanks for the opportunity. Sir, given that you explained the whole scenario where some of the mills are not operational, so what I was reading that some of the spinning mills since last 3-4 months are not able to operate profitably. So are we evaluating any inorganic growth opportunities? Because there have been some deals that have passed through in Gujarat, wherein the players with around 50,000 spindles were acquired by the other players who have 1 to 1.5 lakh spindles capacity. So are we looking into some inorganic expansion currently?
Not at this point of time. When we are not looking at any inorganic growth, we are already into a phase where we are increasing our capacities by around 40% in spinning by organic manner. So at this point of time, not looking for anything beyond that.
And sir, no change in plan about the commissioning of the project, right? Everything is on track, right?
Yes, everything is on track.
Okay.
Capacity expansion plan is going as per schedule. Spent nearly 10% of the money on the project. Commissioning and capacity addition, all the effective steps have been taken. Do not see any issue there.
Okay, because some players have halted their expansion plan. So and sir, out of this total mix of around 500. We are spending 700 crores for spinning. So what would be the mix like? How are we looking to fund this thing? We have spent around 10% and the remaining.
This total 955 crore, 1/3 is nearly 30% is our internal accruals, which we are getting, and about 655 crores is from the debt, which has already been tied up. These are long-term debts.
Okay, sir. Thank you.
Thank you. Our next question is from the line of Chirag Jain from Kamya Wealth. Please go ahead.
Buyers aren't currently sourcing. So I just wanted to know that the issues, whether there is an issue on the customer demand side or due to falling cotton price, they are not sourcing it.
So there are two issues attached to it. First is we are having a very uncertain environment all around the world. We have few challenges like Russia-Ukraine standoff. Number two, there is a mindset that US is going into recession. Thirdly, China having a COVID at the moment, that China's COVID policy, zero COVID policy, where there is a lot of stoppages in China. So all these factors actually, and then the volatility in the commodity prices. So all these factors are actually putting, let's say, customers are not very sure whether what we should do in such uncertain times. So what they have tried to do is they've started to reduce their inventory. As we get to know from various retail sales happening all around the world, that there is no major decline in the apparel sales as such, but the mindset is to bring down the inventories so that if there is any shock, that is much lesser than what it should be. That is the main reason why most of the customers have withhold their orders and tried to use the existing inventories with them.
Got that. Secondly, on the capacity addition on the industry side, so because we are seeing many players expanding currently in the spinning side, so how do you see situation going 3 years down the line of the spinning?
Like spinning, first of all, we have huge capacity in India. Like we have about 50 million spindles of capacity in India. And annual addition is to the tune of about 2.5 million spindles, which is around 5%. So we definitely expect the domestic as well as our international industry to grow by that 5%. So we do not see any major challenge over there. Rather, if you see most of the machinery manufacturers, delivery of the machines is now beyond 2.5 years. So this is a normal growth rate which should continue.
Oh, got that. Also, your investor presentation mentioned about some forward integration you are adding on the knitting side. So can you please highlight more on that?
Basically, since we are producing various kinds of knitted fabrics, so we keep on looking at the kind of fabrics which is not in our profile. So we accordingly add up the knitting machines to suit those requirements. Since we are now into quite a lot of finer counts and a lot of thinner fabrics as well. So we have added the knitting capacity over there.
Okay. Finally, my last question would be on the importing cotton. So are we importing any cotton?
Definitely. We are Definitely.
So what would be the percentage?
Normally, if you, it is not that because there is the shortages they are importing. We are a normal importer of cotton. There are certain kinds of yarn which we produce which needs imported cotton. So definitely those extra long staple cottons and the cotton required for contamination-free yarn, we are regularly importing. Of late, when we saw that there is a shortage of cotton, we pulled on and imported a bit more than normal. So overall, if you see on an average basis, we have been importing 8 to 10% of our garments annually.
Thanks. I will join the queue.
Thank you. The next question is on the line of Kaushal Kedia as an individual investor. Please go ahead.
Hello.
Hello.
Yeah, I just wanted to understand what is the current cost of debt.
Our current cost of debt is, our long-term debt is costing about 3% net of the state investment subsidy. And working capital loans at this point of time, after all this increase in MCLR and other things, is about 7%. Blended cost is about 4.5%.
So this new debt that you will raise will be of the similar cost. We'll get state subsidy on that also.
Yes, of course, we'll get the state subsidy on that as well, and it will be even lesser than this.
So this state subsidy is not you are not looking at it. It won't get withdrawn anytime soon because there are murmurs of because other states have withdrawn it, such as other states are withdrawing it. So will Rajasthan also follow the same path?
Not at least now. And once the state subsidy is sanctioned for a particular project, it continues to the life of that project. So that is one thing which is there. Secondly, in fact, Rajasthan is having a Invest Rajasthan conclave in first week of October, where they are going to announce another new scheme for this. So at this point of time, at least we are not seeing any withdrawal of any policy.
Also, you are saying, suppose, for example, if this new debt that you take, if it's for, say, for example, 10 years, so then even if the state decides to withdraw the subsidy going forward, it will still stay for the full 10 years till it's completed. That is very positive, because our cost of debt becomes very, very cheap then.
Yes, exactly.
And sir, what is the average realization of yarn that is happening currently in quarter 2? The figure was at 400 rupees last quarter. What is it currently?
It was north of 400 last quarter, and now in this quarter it depends on definitely on the counts, but on an average basis what we are seeing is in the range of about 350 to 360 rupees.
So what I understand is, since just from understanding the business, cotton candy has also fallen roughly 10%, and yarn has also fallen 10%. So it's not the price that is an issue; it's the demand that is continuing to be an issue. What is the issue? Is it the raw material prices, or is it the demand?
Like at this point of time, we have both the issues. First of all, on the raw cotton side, we have seen that if you see the cotton prices internationally have fallen by about 35 to 40%. Means it was on the ICE exchanges, this was 155 cents. Now it is about 96 cents. So this is a huge drop. And due to this, the cotton prices all around the world have fallen. Accordingly, the expectation of the customer for the new prices has also fallen. Of course, it is not fallen by 40-50%. Whenever raw cotton, since the raw cotton constitutes about 55 to 60% of the total yarn value, accordingly that has been adjusted to 15 to 20% price reduction is expected by the customer from the top prices which we used to get. So that is an obvious thing. When there was increase in raw material cost, the prices were increased, and when it is falling down, so it will also come down. But the problem is the timing. That is on the demand side. That is on the demand side. What we have seen is, because of this volatility, most of the customers are very scared. There is something, means ICE exchanges have fallen 30% within a span of 3 weeks. This is unforeseen. We have never seen this kind of things happening in last 20-25 years, that such a sharp reduction is happening in the international prices as well as in the Indian prices. The Indian prices, which were quoting at about 1,06,000-7,000 rupees a candy, are now for December futures being quoted at 70,000. But here in India, if you see this as this could be looks like a normal situation. But when we come to the India specific position, what has happened is there is no physical cotton available. So the physical cotton is still today being sold by traders, which is in minuscule quantity at 90,000 or 92,000 rupees a candy. So the problem is here that if you want to buy at 92,000 and then sell at 70,000 rupees a candy price, yarn price, that doesn't suit.
Understood. So sir, at this point, you announced such a big capex, so you're not nervous about it because you think the situation will normalize going ahead?
Yeah, of course, because this is unforeseen. We have not seen this in past. This has all happened due to, I would say, major issue is that it was a statistical failure on part of the industry, as well as on the part of the government body, which is involved in the assessment of the crop. And then we exported nearly 47 lakh bales of cotton. Means we had a drop of about 15% of the crop, and we exported another 15% out of our country without understanding the need of the industry. So this particular situation normally never happens. So this is why we are in such a situation today.
Okay. Thank you very much, sir. Thank you, and all the best to you. Thank you.
Thank you. The next question is from the line of Abhineet Anand from Emkay Global. Please go ahead.
Yeah, thanks for the opportunity, sir. Trying to understand, F22 we had a very sharp increase in margins. I think one of the reasons also, obviously, increasing cotton prices. So if you assume a normalized scenario, not what we are facing now and not what we face in F22. So in normalized scenario, what could be the margin for the yarn and fabric business be?
I've been elaborating on this always, that the normal margins from the yarn business is in the range of 15 to 18%. That is a normalized margin. On the fabric side, the normalized margins are in the range of, for integrated textile players like us, is about 18 to 22%. So this is the normal margin level. So whatever happened in last calendar year or last financial year was an aberration, you can say, and whatever is happening today is also an aberration.
Yeah. So basically, depending upon your product mix, let's say 70% is yarn and 30% fabric, your margin will be anywhere between the two numbers that you told, right? Is it fair to assume that?
Yeah.
Okay. Secondly, sir, is there a conversion ratio of ICE cotton to the Indian cotton? Because, a lot of people have been, emphasizing that ICE was at 150, fallen to 95. India prices from 1 lakh is only down to 85. So that's like comparing peak to down. But I'm saying just on an average, if we have to convert those numbers to Indian, is there any number to that so that one can understand from an average perspective what happened last full year to what has happened to Indian prices last full year?
You want to know the average ICE prices, like? You want to know the average ICE price? Like
no, average ICE price I can probably have it from room, but what I'm saying is that if you have to convert the ICE price to the Indian cotton price, ideally, and in that case, what could that be?
Quite simple. ICE prices are on per pound basis, so easily you can convert this into per kg by 2.2046 multiplying it. So that is simple. And then this is in US cents, so you convert this into Indian rupees by multiplying it with the Indian currency factor. So there you get the per kg price of the cotton, which is being quoted. And these are normally X. These ICE prices are X particular destination. Today ICE is basically, although it is called an intercontinental exchange, but this is basically giving the spot prices of US. Then you add up the freight and other costs to a destination, or depending also the qualities of the cotton we change. So basically you can just convert this into Indian rupees and you'll see the exact cost coming out. And then you can compare Indian Shankar 6 prices, which is also available very easily for you. So you can compare both of them.
So just what you said and what I understood is, multiply those prices, which is whatever cent it is, let's say 95, 100, whatever cent it is, to buy 2.2 odd. And then that is in US dollars. And then you have to convert it into INR, right? And that gives you 8 in terms.
Yeah.
Okay. And 30, sir, you talked about, buying cotton at 90 and selling it yarn at 70. So this 350 to 360 rupees per kg of yarn, that corresponds to around 78,000-80,000 of cotton. Is it fair to assume that?
This is around, basically lower the cotton price, better for us. So that is not, but normalized margins are at this level are basically the prices at which today yarn is being sold. If you want a normal spinner to have a normal margin, then it would be fair to assume that the raw cotton price would be in the range of 73 to 75,000 rupees again.
Okay, so around that 73, 74, you will make a normalized margin at these yarn prices.
Yes.
Okay, sir. Thanks a lot, sir. Those were my questions.
Thank you. Before we take the next question, I'd like to remind the participant to limit their question to 2 per participant. If time permits, you may join the queue for any follow-up. We have the next question from the line of Shraddha from Asian Market Securities. Please go ahead.
Yeah, hi. So what was the cotton yarn spread that we had in Q1, and at the prevailing prices, what are the spreads?
Basically, in the Q1, the spreads in the range of about 90 rupees a kg.
Mm-hmm.
It was very volatile in the month of April. It was very normal in the month of May. It was very volatile, and in June it became too low. At this point of time, if you say, it depends on the cost of cotton which you consider. So it will vary for each spinner at this point of time. So,
assuming the cost of cotton is 83,000 rupees a candy, then what is the spread that you would be making?
On 83,000, On 83,000 rupees a candy, the delta would be about 55 or 60 rupees a kg.
Okay. Sure. So at these spreads, what is the margin that we can expect for the industry?
At this level, I think it will be in single digit margin.
Right. That's helpful. That's it from me. Thank you.
Thank you. Our next question is from the line of Vikas Rajpal from Reliance PMS. Please go ahead.
Hi, sir. Thanks for taking my question. So the first question is on the current situation of the cotton prices, the disparity between the global prices versus the Indian prices. I understand, sir, that this is like a one-off situation. But sir, if this situation arises again in the future, how do we plan to mitigate the situation?
First of all, this is a situation which has not happened in past, and this was first time that we are seeing that on one side there is no raw material is scarce, there is no raw material available, and on the other side we are seeing that the finished goods does not have demand. Normally this does not happen. Now we have been able to mitigate this at this point also, that we are not carrying huge inventory, due to which we are not incurring any major inventory losses. I would say the only thing which we are losing at this point of time is that we are not able to produce to what our normal capacity levels, and accordingly incurring overhead and reducing our margins. So that is the only challenge which we have. Now, how do we mitigate in future is something which will depend on the situations at that point of time. Today, the major problem normally in the normal circumstances, if the imports would have been opened up in reasonable time, India could have imported a lot of cotton and accordingly taken care of all the shortages which has happened in India. And also the prices of let's say raw material would have been in parity with the international prices, because Indian cotton was far expensive than the international cottons. So this situation would have not come. I hope that our policy makers understand this and keep the Indian imported cotton freely available, as they have a very good support mechanism in terms of minimum support price already in cotton for the farmers. So similarly for the textile mills, they should keep these imports open and should have a fair balance of raw cotton. So this was available with us. This facility was available for us for last 2011 to 2021. Only for 1 year this facility was not available, and we hit at the wrong time.
Okay. So my concern here is that if such a situation arises in the future, because by FY24 I think all of our capacity will come on board. So if at that time the situation arises, what will happen is that again we'll have to cut production, and then we'll be sitting on huge capacity which will be underutilized and which will result in fixed overhead. So that is why I was asking this question.
Basically, one more thing which is being done by most of the industry players as well as by us, that we are now, whatever capacities are coming up, we are trying to make it more flexible to be used for synthetic fibers as well. So we are able to man-made fibers, we can equally use man-made fibers. So the capacity which we had installed in our earlier years till 2014-15, are not having that facility where we can use them for cotton as well as synthetic at a similar point of time. Now, most of the capacities are being designed in a manner where both the kind of fibers could be used. And so I think the shift towards synthetic will happen more. That will help us to mitigate this effect in an effective manner. Secondly, already there is a program which has been taken up by various industry associations as well as by Government of India to increase the yield of the cotton which is being produced in India, so that we reach a level where we are already if you see the total production of cotton and total consumption of cotton in India, it has still not surpassed. Means India has been producing about 300 lakh bales. Now our consumption is also in the similar level. Only the exports which has happened has actually damaged the whole thing. I hope government will also take cognizance of this and take care. But from the industry side also, now the production is going to be increased substantially. The plant program has already been taken. We do not expect the situation to come back again, even 2, 3, 4 years down the line as well, because synthetic capacity is also growing, so the fibers will be available as such for spinning.
Okay. Thank you so much for such great clarification. Thank you so much.
Thank you.
Thank you. Our next question is from the line of Pushkar Jain from Sequent Investments. Please go ahead.
My question was regarding the yarn spread. As you mentioned, it was 90 per kg, and earlier we used to see a level of, say 300, 350 per kg. What do you think is the normalized level of spread that we will have for the 18% margin that we talked about?
Normally, with as I told you, 15 to 18% means around 15-16%. The margins are the different. It should be in the range of, depending on the cost of the milk, should be in the range of 90 to 100
rupees. The yarn spread.
Yes, yarn
spread. The normalized yarn spread, right?
Yeah, normalized yarn
spread. Okay.
And this was 90 to 100 rupees was available to us in the past years, if you see, from 2015 to 2014-15 to 2017-18. Also, we had this kind of margin.
Okay. Thank you so much.
Thank you. Our next question is from the line of Manish Kodke from HDFC Mutual Fund. Please go ahead.
Sir, over long term, do we have any plans to enter into garmenting?
Sir, long term is a word which needs to be looked into. But I would say at this moment we are not having any plans.
Okay.
Going forward, I would not like to comment as such.
But we cannot rule it out, right?
Of course, you can. We are in textiles, and garment is one of the second last chain. After this, there is only retail left. So you cannot rule this out. We are into this business, and we have grown this horizontally and vertically, both integrated ourselves from a yarn to others. So we should not never rule that out.
Okay. And sir, one more thing, fabric generally provides higher margin than yarn, and we also get, forward integration. So it also reduces volatility in our margins. So, and currently I believe we are consuming 25 to 30% fabric internally. So, instead of expanding more into fabric, why are we putting more yarn capacity? Like, what is the rationale?
This is a very nice question. Means ideally, I would like to definitely expand the capacity towards the value addition. Definitely, that is the very ideal situation where we can expand the capacity. But there is a limitation to the various segments in which you are operating. So you cannot grow exponentially your fabric business from X to 2X to 3X. It takes a bit more time because it is more related with the fashion. So you have to establish your products, various products in that business. We are in the fabric, in the woven fabric business. We are just nearly 2.5 years old. We started our first operation in early 2020. And within that short span where we had COVID as well as various issues, we were able to establish our product. And then we are now we are already adding some capacity in this expansion. And then going forward, we have all the infrastructure available with us to grow ourselves into this segment particularly. So this is already in the pipeline that we will continue to grow our capacity. And we aim that we should have much more share of the finished fabrics in our whole overall revenue share. As far as spinning is concerned, we feel that we have a very good cost structure available with us. We have a very technical capabilities are there with us, and we can produce with a very reasonable cost. That is also testimony. Is also this confidence is further strengthened that even in these troubled times we are not going under the water, and we are trying to operate in a very reasonable manner. So that is one of the strengths which we have, and that we do not want to lose. We want to continue to have a strength in the yarn business. That is the reason why we are trying to expand in the yarn also. Here also, we are not trying to expand only in one particular count or the average counts like commodity counts which we have. But here also we have a wide variety of products which we are adding to our portfolio. So that will help us in also diversifying our existing risks. That will It is not a commodity-based product which we are going to get in going forward in the yarn as such.
Okay. And sir, in quarter one, you said the 90 rupees was the spread. So this you are talking about the industry spread, right? So our spread could have been higher than this also, right?
I am talking about our spread. Industry spread could have been lower even than this or near to this also. Depends on what cotton cost means. Actually, in this particular quarter, the spread you cannot say for particular player or a particular, because it depends too much on what kind of cotton cost, what was your cotton cost.
Okay. Okay. No, because sir, in Q1 the cotton prices were higher than Q4, and we must have bought the cotton, 30-40 days earlier. So although you said there was no inventory gain, but we could have benefited just because we bought when cotton prices were lower and eventually the prices went up, right?
Actually, if you see at the end of March itself, the cotton prices were around 95,000 rupees a candy. Already they had touched 90,000 rupees a candy. And it peaked at about 1,05,000-6,000 in the middle of May. So if you see the average cotton prices during the whole quarter, they were all averaged out. We also bought at that level. We bought less, that's all. That is why we are not having the inventories now. Otherwise, we could have been, if you would have continued to buy at the same pace, the issue could have been more difficult at this point of time. We tried to follow a policy which we have been following for last 8-10 years, that we buy only what we are able to sell out. So that is one of the reasons why we are not having too much of inventory there.
Thank you.
Hello. Yeah.
Yes, sir. Thank you. The next question is from the line of Marcel as an investor. Please go ahead.
Yeah, sorry sir, the quality of line was not good, so I missed certain part. It was mentioned that in earlier discussion that currently the capacity utilization is 70% or something, and we will be hardly break even in this quarter. So if you can just explain again that what is the current capacity utilization for spinning and for fabric and for woven, this one, knitted in the woven, please.
Our spinning capacity is operating at about 70%. We are down by 30%. Our weaving and processing capacity is operating at about 90%. So that is a normal, what we have been already operating in past quarters as well. And our knitting capacity is operating at 50% capacity level. Normally it operates at about 75 to 80%.
So 50%, last one.
Yeah.
Okay.
I'm talking this about the current quarter.
Yeah, current quarter, yes, sir. You are right, sir. And sir, when it was mentioned that in the current quarter will be hardly break even, so this was in context of the all three segments or only for spinning?
Majorly for spinning.
Spinning, okay. And sir, when this new capacity is going to come on board, will it come in phases or will it come all together at one shot?
This is going to come in phases. Basically, we are expecting our knitting and weaving capacities, value-add capacities to come within this financial year. Spinning capacity will be added in Q1 and Q2 of the next financial year.
But sir, if this market is so up and down volatile, so whether this use capex justifies now?
Sir, we have been seeing this kind of volatilities in this business. So it is not something that we are not accustomed to volatility. Yes, this time it has been too much. I agree with you. But that does not make, you cannot stop your businesses or stop to grow. We have been, if you see our history, in last 20 years, we have grown with a CAGR of about 18 to 19% consistently. We continue to invest in new technologies, try to see wherever there are new opportunities coming in. So we continue to do that. And still we have belief in textile sector. Textile sector is not gone out, or it is not something that with this one volatility this will go out. We foresee that there are a lot of opportunities which is there. Today we are seeing basically a lot of China plus one strategy playing out properly. It has definitely changed the business dynamics and demand shifting to Bangladesh, Vietnam, Pakistan, and Sri Lanka from China. We are seeing a lot of changes happening in the product profile. Within our own country also, we are seeing a lot of new capacities in the downstream channel coming in. So demand of yarn is not going to go out. Yes, this particular situation has come up where there has been too much of volatility on the raw material side. So we'll have to weather that down.
So I'm sure that regarding this volatility, like this, the cotton textile industry have taken maybe suitable presentation to the government, so that in the next cotton season, suppose if the same thing happens, then the government should allow the import of cotton. Has it been done or not, sir?
Yes, of course, this has been done. Rather, we have taken up many measures in this particular segment. Government is already been informed, is very well informed about the situation. They're also working very, very effectively on the increasing the production as well as yield of cotton, so that we have sufficient availability. They foresee that if India has to go to $100 billion of exports and having strength in cotton textile, they need to grow more cotton. Secondly, import of cotton, we have already highlighted that they should be freely available, and they have definitely promised us that they will continue to look at this in a very consistent manner without harming the interest of the farmer. So we foresee that this kind of challenges which has happened in past could be mitigated well in future.
Yes. Yes, sir. And sir, like this new capacity which we are building up, so in that capacity, can we also produce man-made fiber or not?
Yeah, of course. As I explained in the earlier question, that we are trying to do the new capacity in a manner that we are able to run the man-made fiber as well in the capacities which we are putting up. In our earlier capacities, the capacities which were installed pre-2014, we cannot run man-made. We have to invest a lot if we have to run the man-made fiber on those mills. Otherwise, we are capable in our new capacity to run the man-made fiber.
Thank you. Next question is from the line of Zain Baniali from Odyssey Capital Management. Please go ahead.
Hi, sir. Most of the questions have already been answered. My question is on two fronts. One is, can you please tell us what percentage of the revenue comes from top 5 customers?
I think the total revenue from top 5 customers would not be more than about 15-16%.
Okay, so that's good. This China plus one thing that's going on. So who is going to benefit more from it? The man-made fiber industry or the yarns? I mean, particularly.
Like man-made, in the yarns also we have man-made as well as in the cotton. But here whatever is getting shifted out of China, because a lot of restrictions have come in on the cotton production of the China. If you see, what is happening is they have banned the Xinjiang cotton to be used in Europe and US by most of the brands. So that is, and a law has also been passed this year about this. So we expect that cotton industry should benefit more out of this. Already, as far as synthetics is concerned, they are getting advantage because of lack of shortage of cotton. This shift will be again, since the capacities will align themselves, the capacity will again shift back to cotton once the demand is normal. As far as India getting benefited, we have to actually increase our capacities in the downstream channel. For the spinning business, we are very well geared up, and the capacities are also coming in the right direction. But downstream channel has to increase the capacity substantially, especially the garments. That needs to be built up so that we are able to sell the finished product. As more and more finished product is sold out of our country, more benefit comes to us.
Thank you, Mr. Baniali. Request to join the queue for any follow-ups. We have the next question from the line of Prerna Jhunjhunwala from Elara Securities. Please go ahead.
Thank you for the opportunity. I just had a follow-up question on the comment made just some time back, that the cost of investment by including MMF-based production will increase if we are setting up a capacity in spinning for cotton plus MMF versus only cotton. I just wanted to understand the difference between the two, the cost difference between the two type of investments.
No. I think you have misunderstood my answer. I have informed that our capacities which were installed pre-2014 are not suitable to run the synthetic fiber. If we have to run the synthetic fiber on them, we have to make a lot of investments.
Oh, okay. Not okay.
Post that, what we have done is the new equipment which is coming in are now suitable to run both the kind of fiber. This is when we do initial investment, we can just with a very small number, with a very small amount of money, we are able to run basically synthetic fiber. Here also, I would like to highlight that cotton spinning is more expensive because you have more number of machines, you have combers and you have other equipments also running in, which remain stopped when you run synthetic fibers most of the time. So actually, if you see the cost of a spinning mill on the cotton side is higher than the cost of a synthetic spinning mill. Only thing is, if you have to gear up your equipment according to the need so that we have both the things could run together. Whenever need arises, we can run both the kind of fiber.
So you can run 100% new capacity on MMF also now? Or
Not
there is
100,
some mix?
not 100%. Means basically we have to blend cotton in it. We will have to blend some cotton.
No,
will not be able to
MMF
run.
is blended versus
Yeah,
100%.
blended, of course. Blended we can run blended, of course. We can run nearly all capacity on blended.
Yeah, thank you for that. That clarification is really helpful.
Thank you. Our next question is from the line of Swapnil as an individual investor. This time constraint, this will be our last question for today. Swapnil, over to you.
Yeah, thanks. Sorry, actually, again, my most of my questions are answered, but just one follow-up question on that. The current quarter break-even point that was discussed just now. So sorry, I missed the initial part as well. And so with the current capacity that you mentioned, sir, that 70% of the yarn capacity, and then the 80% or 60% of the knitted fabric, etc. That is for the current quarter Q2, is it, or you're talking about Q1? So the break even or just the break even that we are going to achieve, is it for the last quarter that we are talking about, or the current quarter?
I'm talking about the current quarter, running quarter, July to September.
So okay, so for the Q2 we should expect only the break even.
Yeah. If you in the last quarter, if you see that we have run, our production was down just 5%, primarily on account of some power outages which happened in Rajasthan and some coarser counts which we had to stop. Otherwise, more or less, the complete production had come in.
Okay, fine. So for the current basically for the current Q2 quarter, we should expect only the break even with this issue currently.
Still, we have time to go on that, so I would not like to give any guidance on that.
Okay, thank you. Thank you very much.
Thank you. Ladies and gentlemen, that will be our last question for today. I would like to hand the conference over to Mr. Avnish Chandra for closing comments. Thank you, and over to you, sir.
Congratulations, Dinesh sir and Maheshwari on this decent performance in a tough environment. Since we are completely out of time, sir, very quickly, Q2, everybody knows that we are facing a challenging time. But considering Q3, we will have festival season and we have indication of cotton prices going down at least on the future side. And we have positive news on cotton crop as well. So can we expect Q3 onward, we will have again at least hitting the performance of Q1?
Q3 would be still too early to predict Q3, because Q3, when the crop comes in, what is the kind of situation of the Indian spinning mills and how the demand is there. So these 2-3 issues will be there. But definitely we expect Q4 to be very normal. Should be a very, very normal quarter. In Q3, we have to still see the timings. It depends a lot on when the rains are coming up. If the rains, we still rain at the late end of the season, that delays the cotton crop, arrival of the quantity which is coming in. So there are many issues involved in this. So we expect Q3 to be still fluid, but definitely we expect it should normalize in Q4.
Okay, sir. Okay, sir. Thank you very much, Dinesh sir and Maheshwari sir, for spending your valuable time and providing us this opportunity to host the call. Sir, any final comments before closing?
I'd like to thank everyone for joining in the call. I hope we have been able to address most of the queries. For any other information, further information, you can get in touch with our finance team as well as our investor relation advisor. And thanks again, once again, for taking the time out and joining us on the call.
Thank you very much. Ladies and gentlemen, on behalf of Smith Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you.
Thank you.